Okay, Tyler, we now have financial results from both SolarEdge and Enphase. SolarEdge just reported on August 8th. We saw Enphase about 2 weeks ago. These two companies are big competitors. They share a duopoly in US residential solar, largely in Europe, and they're increasing their market share around the world. Let's talk about SolarEdge's results, a little bit of what Enphase reported as well, and wrap things up with where we stand with these two stocks, how investors should be thinking about them.
It's been a heck of a year for residential solar, man. It's gonna be interesting to see where it goes from here.
Yeah, we're hoping the first quarter was the trough. There's some indications that might be the case. I'm Jason Hall. This is Investing Unscripted. He is Tyler Crow. This video is sponsored by the Motley Fool. We got two great stocks we're going to talk about here. We're going to give you our ideas at the end about them as investable ideas. But our partner, the Motley Fool, has a great offer for you. If you're looking for even more great stock ideas than the two we're going to talk about here, go to our link. It's right there on the screen. It's fool.com/unscripted. Again, fool.com/unscripted. Go to that link. The Motley Fool has got an offer for you for free. They're going to give you their 10 best stocks to buy right now. Go check that out. Okay, Tyler, I'm going to kick it to you to talk about SolarEdge's results.
Yeah, so from a numbers perspective, it wasn't pretty. It wasn't expected to be pretty, and management was kinda guiding for pretty gross quarter, and that's what we got. To be fair, the first quarter is supposed to be one of the worst quarters for this company. You don't do a lot of residential roof construction in the
Right.
winter.
Seasonally, it is their weakest quarter, the fourth and the first, because of the realities that less solar gets installed during the winter. So it's a tough period for those businesses.
Yep.
But even objectively speaking, it was bad.
Even by those standards, they were bad. Quarter over quarter, so sequentially, revenue was down 35%. Year over year, revenue was down 79%. Gross margins fell negative for the first time and I can't remember. And you can splice it up in all the GAAP and non-GAAP ways that you want to cut it, but there were a lot of losses this quarter. And part of the reason for the large losses is that at least compared to Enphase late last year, Enphase spoke a lot about consolidating some of its contract manufacturing facilities to kind of cut costs and really scale the business to what the market was telling it needed. We haven't seen really the same thing from SolarEdge. They've been a little bit more ambitious, I guess, if you will, in kind of maintaining their position, whether or not they may be producing less from a facility, but they're still keeping that facility on and running maybe at lower capacity. That's part of the reason why we saw such a sharp decline in profitability because they didn't really take any costs out. And this is kind of like this is what you get when you have higher fixed costs. You can quickly kind of decline into negative margins, which is very typical in cyclical industries. On the, I guess you could say, the managerial anecdotal side, management seemed to be saying they're saying some encouraging things. One of the things they talked about last quarter and this quarter was that they're seeing what they're called channel inventory depleting, which means that its distributors are, winding down the inventories that they had and that they're what they called normalizing the inventories at those levels, which basically means we haven't been selling to these guys and they've been drawing down their inventories and they're going to have to eventually buy back from us. And that's kind of the upswing that they're waiting for in terms of sales. You can even see it, their inventories continued to grow this quarter. And the one thing that SolarEdge has a little bit more exposure to than Enphase, and one thing that they've been saying is a bright spot, is that while residential remains decidedly weak, understandably so, higher interest rates, kind of a slower economy, utility prices in Europe have kind of gone back down after really high prices during the early onset of the war in Ukraine. SolarEdge has been saying that their commercial operations is seeing very strong, robust growth compared to anything else in its business, which is not
Let me
unsurprising. They're
define
seeing
commercial operations. I think that is important because because you have the two, again, you have residential and you have commercial. So residential, of course, is rooftop solar for houses, and then commercial solar, yeah, they're both still distributed solar, right? They're not the utility, they're not producing power that they're selling to homeowners or big industrial buyers. It's like a Walmart or a parking garage. That's commercial solar. Enphase has almost no commercial
yeah,
business. It's almost entirely residential. And SolarEdge does have a pretty decent amount of commercial business on top of its residential business too.
and that's what they mentioned about it too, is companies still looking to meet environmental, social governance goals of based reducing carbon footprints and outputs. So you're seeing a lot of businesses continue to invest in rooftop solar for industrial warehouses, manufacturing facilities, or things like that. And SolarEdge is even starting to dabble a little bit in optimizing utility scale. It's very nascent business, but they did mention on their investor presentation. So there's some outlets where it's starting to work. But, when your bread and butter been and continues to be residential solar, it's just going to be tough. As long as interest rates remain high, it's until people kind of either interest rates come down or people kind of get used to the fact that, hey, maybe interest rates are just not going to come down. And if I want to make this purchase, I'm going to have to deal with higher interest rates. One of those two things needs to happen before we're going to see a real uptake in residential. So, like I said, management seemed to be saying the right things.
What we're hearing from residential solar installers, generally across the industry, the narrative is very much the same, right? And also part of that narrative is that hopefully the first quarter was kind of the trough. We talked about the fact that from a seasonality perspective, first quarter's the lowest revenue quarter, it's the lowest activity quarter for solar. That's a reality. But if you look at the guidance, and this is true for the guidance from SolarEdge and the guidance we saw from Enphase, both are calling for sequential revenue gains, right? Part of that's going to be better the timing, but I do think also there is some evidence that the market may have bottomed, and it really matters for a couple reasons. Number one, whether it's just the seasonality benefit or that demand is starting to generally recover, they need more volume out of their manufacturing facilities to get better margins, to generate more cash flow, to generate more gross margin dollars to cover their operating expenses. I'm going to highlight that one difference for me as we transition into the part of the conversation where we're talking about SolarEdge and Enphase's investable ideas and a little bit of kind of maybe SolarEdge versus Enphase if you're looking to deploy money right now where you might want to think about going. And I'm going to share gross margin details for both companies. I think this is really, to me, it's really informative about one of the key differences in the structural differences between these businesses. And we see that it was in the fourth quarter of last year, and again, it continued in Q1 of this year. SolarEdge was negative gross margin, generated negative gross margin dollars, meaning at 12.8% negative gross margin, for every $100 they spent on cost of goods sold, they earned back $87.20 in revenue, right? You can't operate a business model when for every dollar you're spending to build a product, you're only getting back 87 cents, and you still haven't even covered your operations, debt expense, any of those sorts of things. So I think that's important. Now, I want to compare that to the folks over at Enphase, and this dark blue here, this is the first quarter of 2024, top right, 46.2% gross margin in the first quarter. And then you go back to the fourth quarter of last year, it was over 50% gross margin. So even as just really struggled with this massive decline in revenue, Enphase is still generating lots of gross margin. They had an operating loss last quarter, but because of some financial incentives that are in play around the Inflation Reduction Act, they got some tax benefits that were sizable. And this is the structural difference, Tyler, between SolarEdge and Enphase. SolarEdge is a lot of its manufacturing is outside of the US. They use a lot of contract manufacturing, but their ability to move it into the US is far more limited. Enphase was able to close a contract manufacturing site in Europe, and by moving that European production to North America, they immediately gained some incentive dollars, right? And it's a really smart, savvy move because it means they're still generating positive cash flow. SolarEdge is burning cash. Enphase generated like $40 million in free cash flow last quarter. So even with revenues down a ton, like just from a viability of their business in this really low point, Enphase is in a better position right now. Tyler, let's talk about the balance sheets though, because I think that's really important for both of these businesses. You want to talk about SolarEdge?
Yeah, I'll keep this quick. But here's the one thing that I kind of hang my hat on, and it relative to SolarEdge and Enphase is that it feels like Enphase is, like I said, I think I said earlier, they seem to be holding position and trying to prepare themselves to be better equipped to handle the upcycle of the market, right? Keeping the facilities running, things like that. They are able to do that because they have a very good balance sheet. I was just running just kind of a quick glance at the numbers. Even if it's like inventory and maybe a couple of clients can't pay on its receivables. If all of that if all of those bad debts total up to $1 billion, it is still more than enough to cover both its short and long-term liabilities. So any debts, expenses, anything like that can basically be paid off with a rather significant margin of error in its current assets. So the concern that the company is headed for going belly up because of a bad couple of quarters, I think is presumptuous and gives me some solace that it has the balance sheet to keep it going until we do see an eventual upswing in a cyclical market.
I think that's exactly right. This is, you and I've talked a lot about First Solar, and I think really both of these companies, if we're being realistic, have kind of taken that First Solar approach, leveraging your cash generation capabilities to build a really strong balance sheet. Because eventually, what's happened over the past 9 months was going to happen, right? The strong upcycle was never going to last forever. So you bolster your balance sheet, have a bunch of excess cash, so that when the market does turn, you're able to get through these periods. And I think that's absolutely right with SolarEdge. As much as it's burning cash and the negative margins and all of those things, eventually demand is going to turn back, and they're going to be in a position where they're completely fine and they can accelerate for growth. Enphase also same thing. I think has some 500 or 600 million dollars in net cash, way more cash than debt. So, and again, that modest amount of positive cash generation that they have, with the caveat that they have substantially pulled back their manufacturing capacity, even though they say they have the ability to bring lines on very quickly. SolarEdge hasn't reduced its capacity as much, right? And it's showing on the bottom line, but it means that they're able to turn that switch back to growth a little bit more quickly than maybe Enphase is. Okay, last question here to wrap this up, Tyler. You're looking at these two stocks. You're ready to invest in the solar industry, looking for a good opportunity. Are you buying either of these right now? If not, what are you doing instead?
I still own SolarEdge. I don't plan to sell it, and I'm still waiting. I don't see a rush. There's gonna be time, I think, for when the cycle comes that I don't need to precisely time the absolute bottom of this business. That's fine. I'll when I see tangible evidence of an upswing, I'll be ready to go. If I did want to invest in solar right now, I would probably be looking at either First Solar or Canadian Solar, both of which much more exposed to utility, have very strong backlogs. They're not going to go through as much of the seasonality or cyclicality as residential because basically they've got orders for multiple years just waiting to get fulfilled. And so there's plenty of just work to be done to get them through basically any real decline in the market.
Yeah, hard to argue with you there. I own both First Solar and Canadian Solar as well. I do want to say that as much as I think Enphase had the better quarter, maybe the less worse quarter is the way to think about it. And there are some indications that maybe whether the cycle is really turning or just the improved seasonality aspect of getting into the spring building season is going to help take some of that pressure off of cash flows and off of their balance sheets. SolarEdge stock, it has come down so much. And I know it's a great business. And I do think that it's going to be a winner again over the long term at some point once we see the cycle turns. Of these two, and part of it's because I have a pretty large in-phase position already, give me another quarter. And if we see more evidence that the cycle has bottomed, revenues are increasing, orders are increasing, their margins are kind of stabilizing a little bit. I will say, I think right now, SolarEdge might be a little ahead of Enphase for me in terms of the risk reward profile, simply because the stock is so beaten down. And I think part of it's because the business is a little misunderstood because of the things we were talking about with the balance sheet. So for me right now, as much as I love Enphase and I think it maybe end up being the better performer, I think from here, SolarEdge might be a little more compelling on a risk reward profile. But investors certainly don't need to rush. You don't need to be in any big hurry, like you said, because it's going to take some time for things to turn. And even missing the bottom, to make sure you miss the bottom and buy on the way back up, honestly, that's probably a smarter way for most people to invest in these companies.